Hey everyone, welcome back to Corporate Decoder, the place where we sift through corporate filings so you don't have to. Today, we're diving into a Form 8K filing from Giftify Inc. And trust me, it's a gift that keeps on giving, especially to Real World Digital Assets LLC because it involves a loan. Scroll form. 8K/scroll. So Giftify filed this report with the Securities and Exchange Commission, or SEC. The report tells us about something important that happened on February 19, 2025. Think of it like a company's way of saying, hey, something big just happened and you need to know about it. 1.01 Entry into a Material Definitive Agreement/scroll. First, a promissory note is basically an IOU, a promise to pay back money. This one's for a cool $1 million, and the secured part means that Giftify is putting up some of its stuff as collateral, in case they can't pay. Real World isn't lending this money for free. Giftify has to pay interest 11.5% each year. That's the cost of borrowing. They need to pay this back by the end of 2025. What happens if Giftify doesn't pay up? Well, Real World gets to grab those assets, whatever Giftify put up as collateral, which is everything they have. Now there's a catch. This loan isn't the only one Giftify has. They already owe about $4 million to Pathward National Association through a line of credit. This new loan to Real World is second in line. Pathward gets paid first, and only then Real World gets their money. It's kind of like being second in line at a buffet where someone has already grabbed the best shrimp. So what's the whole point of this new loan? Well, it's replacing an older one from September of 2024 for the same amount. That old loan was due on February 19, 2025, which is today. Giftify is basically kicking the can down the road, borrowing money to pay off an old debt. If you're really curious about all the nitty-gritty details, Giftify has attached the actual promissory note and security agreement as exhibits to this report. You can find them on the SEC's website. So, what does all this mean? Well, Giftify needed $1 million and needed more time to pay it back. But they have to pay a hefty 11.5% interest rate and also guarantee everything they own. They also had a $4 million loan, meaning they are $5 million in debt and need to be paying that back shortly. Is this a good thing for the company? It depends if they can pay this back by the end of the year. If not, they might lose everything to their debtors. Looking at the bigger picture, this move suggests Giftify is facing some cash flow challenges. Refinancing debt isn't inherently bad, but relying on high-interest loans can become a slippery slope. The high interest rate also tells me that the original loan wasn't fully paid. Financially, Giftify's situation warrants caution. The significant debt burden coupled with a high interest rate paints a concerning picture. We need to see strong revenue growth and improved profitability to justify this level of risk. Given the limited information available and the concerning debt situation, it's difficult to give a bullish outlook. A neutral stance leaning slightly bearish seems most appropriate. The company needs to demonstrate a clear path to profitability and debt reduction to inspire confidence. My advice is to keep a close eye on Giftify's future filings. Revenue growth, profitability, and debt management will be key indicators of whether this company can turn things around. That's all for this episode of Corporate Decoder. If you found this analysis helpful, please subscribe, hit that like button, and let me know what filings you want me to decode next.